Ever since the 2008 financial crisis, the central banks of the world have been kind of in emergency monetary policy, where they're continuing to make money easily available by keeping the interest rates very low, especially in Japan, into the bond market and creating money in order to buy assets. This has caused a very good environment for investors. Over the last decade, that increasingly that money finds its way into more high-risk assets. 2017, I believe we saw a peak of that. They were pushing money into the stock market at a rapid pace. The stock market grew, depending on which market, between 20% and 40% over the course of 2017. And of course, we know what happened to Bitcoin in that time frame. What we're seeing so far in 2018 is more volatility, a bit more uncertainty of the direction of that. As far as a price target, let's say on Bitcoin, I really say that I would not be surprised to see it by the end of the year anywhere between $1,000 per coin and $50,000 per coin. Neither would surprise me at the moment, and I have no way of guessing which it would be. At the moment, I'm holding around 6% in cryptocurrencies. I advocate quite strongly that people build a portfolio that is robust in nature, that can stand the test of time. And the only way to really do that is to have a more global outlook. So, think about bonds and ETFs and stocks and indexes. Copy other people's trading. This is another option that we have on eToro. And then, the cryptocurrencies can fit in very nicely with that. Because Bitcoin is legal in Japan, and because Japanese people have a culture of trading and online trading, which is not prevalent in most of the rest of the world, I believe that the traders are a bit more in tune to what's happening, the movements, the Bank of Japan. What we saw a few weeks ago was the first time that I really saw evidence that other markets were having a strong influence in the cryptocurrency space. And what happened was there was some speculation that the Bank of Japan was about to change their monetary policy. The Japanese bonds, the yields had spiked. And what that means is that if the yields are spiked, that means that the bonds are actually selling off, because the yields trade opposite to the price of the bond. So they've sold their bonds, now they're holding yen. So what do they do with that yen? And what it seems is that over the next few days, a very small percentage of that had flowed into Bitcoin. Actually, what I showed was a chart where we saw the big spike, and then over the next few days, a gradual rise in Bitcoin. And I believe that could have been what caused the last rally. It's a theory, and of course, there's no way to prove such a thing. But this is something that I see as very real. This is why I'm also watching, as part of my crypto analysis, the yen futures. If I were living in Japan, right, and I was managing a savings account, and I had, Governor Haruhiko Kuroda and Prime Minister Shinzo Abe telling me, by the way, we want the yen to be weaker, and my savings account was managed in yen. And then I have, an asset like Bitcoin, on the other hand, which, even though it's very volatile, has produced multiples in profits over the last few years. The question in my mind wouldn't be, should I diversify and hedge into Bitcoin? It would be, at what percentage do I diversify into Bitcoin? The Japanese economy is, as we know, one of the largest in the world. So even if that answer is 1%, that's still a substantial amount of money that would need to flow into the market.